Hello everybody, welcome to my channel. Today we are gonna talk about Vedanta Resources bonds. But before we begin, I'd like to ask you to click on the like button, subscribe to this channel, share this video with your friends, and make some comments below. Okay? So let's go. I selected some issues from the company. Okay, there are 5 of them. Two have maturity date of 2023. Other two of them have maturity date of 2024, and the last one 2026. All of the coupons are very interesting, very high. So obviously, this company issues high yield bonds, okay? And all of the bonds that we are analyzing today are in US dollars. So let's talk about Vedanta. I would like to begin with Wikipedia page about Vedanta, okay? So according to Wikipedia, Vedanta Resources Limited is a global diversified metals and mining company with its headquarters in London, England. Okay. It's the largest mining and non-ferrous metals company in India and has mining operations in Australia and Zambia, and oil and gas operations in 3 countries. Its main products are zinc, lead, silver, oil and gas, iron ore, steel, aluminum, and power. The company is primarily owned by the family of Anil Agarwal through Vulcan Investments, a holding vehicle with a 61.7% stake in the business. This is very important, guys, because we are talking about a company that has an owner, it's not a corporation. So let's continue. Let's check the card in the right side. It says that Vedanta is listed in New York Stock Exchange. Actually, it says it's also listed in London Stock Exchange, but this is not true. Okay, it was delisted from London Stock Exchange. The company was founded in 2003 by Anil Agarwal, and today Anil Agarwal is the executive chairman. If you want to check more about the company, you can visit the website www.vedantaresources.com. All right, guys. So this is the company presentation that is public on the Vedanta's website. It's dated of February 2020. Let's go through it. It talks about in the economy, the reforms push, many big steps in 2019. Corporate tax cuts, real estate fund, bank merger, IBC amendment, RCEP withdrawal, FDI rules. India expected to grow fastest among emerging economies with real GDP growth rates 7% or more than this from 2020. All right. Key highlights. Operational, financial. EBITDA 10% growth year over year, 45% quarter over quarter, with industry-leading EBITDA margin of 34%. 34% is actually a good number. Net debt to EBITDA at 1 EBITDA, lowest among Indian peers. That's very nice. Strong financial position with total cash and liquid investments of 35,000 rupees. Around awards and recognition. Okay. About zinc, oil and gas, aluminum, other assets, iron ore, electro steel, steels, strategy to enhance long-term value. This is more interesting. Continue focus on world-class ESG performance. ESG is on the hype now. Augment our reserves and resources base, delivering on growth opportunities, optimize capital allocation, and maintain strong balance sheet, operational excellence. Financial update. Financial snapshot Q3. The EBITDA, as I said before, is up 45% quarter over quarter. That's really nice. Net debt to EBITDA 1 time, lowest among Indian peers. EBITDA margin 34%, industry leading margin. That's nice. The ROAS 10.9% remains strong, and cash and cash equivalents, strong liquidity. Very nice. And this is important. About the balance sheet. This is the debt profile, so term debt maturities. And we can see that most of the debt has maturity of 2021 or 2022. Okay. Regarding the average term debt maturity, we can see that it's almost stable in 3 years. The interest income returns 7.2%, and the interest expense maintained around 8%. And we can see here a columns chart about net debt to EBITDA. We can see here that the debt seems to be under control. About Vedanta Group. Okay. All the vehicles. This is nice. This is interesting. Vedanta, a 20 years track record of delivering growth, meeting all obligations to debt holders on schedule, and industry-leading dividend distribution. This part of meeting all obligations to debt holders on schedule is very, very, very important. So 3 important points about the company. The first one, Vedanta resources are driving force. The second, grow existing businesses. And the third one, growth to deliver balance sheet. They seem to have a very good discipline with the balance sheet. This is quite important for debt investors. And now we have the appendix. So let's jump to the next slide. Now let's talk about the issues, guys. The first one that has a maturity date of April 23rd, 2023. It has a fixed coupon, no call, 400 million outstanding, minimum of 200,000. It's a senior unsecured bond. Here's the number of the ISIN, the number of the CUSIP, and the price is below 100, so it's 90.59% lower than before the COVID crash. The yield to maturity is 13.1%. It's a very interesting yield to maturity. The second one that has a maturity date of May 31st, 2023. Okay. It's a fixed coupon, no call, 500 million outstanding, 200,000 minimum, senior unsecured. Here's the number of the ISIN, the CUSIP, and the price is 89.12 or 9% lower than before the COVID crash. And the yield maturity is 12.7%. Also very interesting. The third one has the highest coupon. It has a maturity date of January 21st, 2024. It's a fixed coupon bond. This one has a call. The call is on December 21st, 2022. And the call price is 106. It has 1 billion outstanding, minimum of 200,000. It's a senior unsecured bond. Here's the ISIN, the CUSIP, and the price for this one is 108.95. This one was issued after the COVID crash. It has a yield to worth of 10.3%, yield to maturity of 10.3%, and a yield to call of 11.4%. The next one, it has a maturity date of August 9, 2024, fixed coupon as well. It has a call on August 9, 2021, and the call price is 103.06. It has 1 billion outstanding, minimum of 200,000. It's a senior unsecured bond. Here's the ISIN, the CUSIP, and the price is 80.75 or 9% lower than before the COVID crash. The yield to worth is 13.1%, the yield to maturity is 13.1%, and the yield to call is 61.8%. And finally, the last one. It has a maturity date of April 23rd, 2026. It's a fixed coupon. It has a call on April 23rd, 2023, at a call price of 104.63. Has 600 million outstanding. The minimum is of $200,000. It's a senior unsecured bond. Here's the ISIN, the CUSIP, and the price is 86.50 or 11% lower than before the COVID crash. It has a yield to worth of 12.9%, yield to maturity of 12.9%, and yield to call of 18.7%. So guys, what do you think about this video? Do you like it or so guys, what do you think about this video? Do you like it? Do you like Vedanta Resources? What do you think about this company? What do you think about its bonds? Please leave a comment below this video and tell me which bond would you buy. See you in the next video. Bye bye.